Investing in low-cost index funds is a great way to build a diversified portfolio with minimal fees. Here's how to do it. Understand index funds. Index funds are mutual funds or ETFs that track a specific market index, such as the S&P 500. They aim to replicate the performance of the index they follow. Research and choose a broker. Select a brokerage platform that offers low-cost index funds. Look for brokers with no transaction fees for buying index funds and low expense ratios. Open an account. Open a brokerage account if you don't already have one. This can be a standard investment account or a retirement account like an IRA. Select your index funds. Choose index funds that match your investment goals. Common choices include S&P 500 index funds, total stock market index funds, and international index funds. Ensure the funds have low expense ratios. Allocate funds. Decide how much money you want to invest in each index fund. Consider your risk tolerance and investment horizon when allocating your funds. Invest regularly. Use dollar cost averaging by investing a fixed amount regularly, such as monthly or quarterly. This strategy helps reduce the impact of market volatility over time. Reinvest dividends. Opt to reinvest any dividends earned from your index funds. This can significantly boost your investment returns over the long term. Monitor and rebalance. Periodically review your portfolio to ensure it aligns with your investment goals. Rebalance as needed to maintain your desired asset allocation.